This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. Welcome back to the channel. Want to discuss bar by bar analysis, but I want to talk about it in a slightly different way. Most of the time when I've brought this up in the past, I'll look at a daily chart and go bar by bar as if you're going to make a decision based on those bars. And what I want you to do is actually use the bar by bar analysis on higher time frames and help that confirm the lower time frames. So let's go ahead and get into this, and let me give you an example using Microsoft's weekly chart. So this would become relevant if you're looking to do even like a swing trade on Microsoft off an hourly, or you want to do a trade off the daily chart and you're looking at the indicators on the daily and the hourly, but we want to confirm that by price. Always use price to confirm what we're seeing. And so what I want to do is I want to start here on the left side and then work my way through the peak and then the lower high and lower low. And if you notice what happened, so we had pretty good action here on this. We had sort of a little breakout pattern where we break out and we get a little pullback. Now, if you notice, we had a gap on this bar, okay? But it came and held the breakout level. So let me just show you that. You see, there's the breakout level. We came back to that pullback level and held. And if you notice, we had one gap down day, but then there was really no follow through, because if you see what's going on here, we've got a tail that forms even on the gap day, and then a tail that forms again on the next day with very little downside progression after touching the 18 on the weekly chart. And then we have a higher bottom with a tail. And then we do have a red bar with a topping tail, but it doesn't progress lower. And especially on the next bar, it doesn't make any further downside progress and doesn't even touch the 18 week. So all of this is taking place as this is working sideways above the breakout area. So I could do this without any moving averages, without any indicators. I can see that we have this down bar, this down weekly bar, but there's no downside progress that's developing. So when I'm looking at this, it can help to confirm what I'm seeing on the daily chart using the indicators. So just kind of keep that in mind. Like, you don't want to overreact to something on the lower time frames if the higher time frames is giving you positive feedback. So we've got this 18 and 40 rising, right? And we've showing the price action is not showing any real signs of distribution yet. We had that one down day, but other than that, that's pretty much it, or down week. Now we have another move to the upside, nice green bar with the tail, another strong, really strong green bar, bullish bar to the upside, and then we get this kind of hangman, whatever you want to call it, where we open and then give back and then come back up. And it's usually a sign that the market's getting a little tired. Whenever I see, it's like a doji, anytime you open and close near the same level, it's sort of a sign of indecision. Now we've gotten stretched away on this weekly chart, but look at what happens. So we get the big red bar after being stretched away to start the down move, and then look what happens. Tail, tail, tail. As this works into the 18, there's tails forming, showing there's support underneath. This is not violent selling. I can see this. So the reason why this is so important here is if you're looking at this on a weekly chart, on a daily chart, it could be progressing lower to the downside, and you could be getting some pretty strong negative DI action, making you think that the ADX is really strong selling if you're getting individual bars progressing to the downside, right? Because sometimes there's no overlap in the bars. There's just pure down moves taking place, and this is where negative DI comes in. So you want to do this, but you also want to see what's going on the higher time frame, and you can see that this is actually not really strong selling. So whatever shows up on a daily chart, sometimes you have to temper it by looking at the weekly bars. And if you get this type of bottoming tail action, you know that this is actually really bullish. All right, and then we get a pause bar. It tries to progress higher, but it was a small bar, right? And then we tried to go down, and you retest these two bottoming tails with another tail and come back up. I mean, this is very bullish here. Remember, this is happening over the course of a week. So at the end of this week, you're feeling pretty confident that there's a strong support level underneath. Now we make a strong move to the upside. We have a pause bar, and then we have another pause bar. But other than that, it's really just strong to the upside. Now we get a pause bar here, another pause bar here, and then we show some red. But again, we start to pull back, but look at what happens. Even on this first decline, taking out these bars, you have a tail, and then you have another tail, and then another tail right near the 18 again. I mean, you see what's going on? Every time we get near support or trend support, there's buyers underneath. So again, you got to be really careful about looking at negative DI as a big, big negative on a daily chart or an hourly chart or something like that. When they're showing up like this on a weekly, it's going to temper that negativeness. Okay, you're going to be less negative when you shouldn't be negative. I mean, the reality is this is actually both of these have been really orderly pullbacks, and I think you want to be able to take advantage of that by watching the bar by bar analysis on the longer time frames. Now, look at what happens. We get another strong green, a little bit of a pause almost, but it continues to progress higher. And then a monster green bar to the upside, a little bit of follow through. Now we start to get a little tired. Now look at what shows up here. So we get a big red bar to show up. Outside reversal that takes here's a close here. Here's a close here, and here is a close here. So this is a first reversal bar that takes out 3 closes. Actually, this one did too. Let's see. 1, 2, 3. This one took out 3 closes as well. But then remember, we got no follow through after that. Now look at what happens here. Not only do you take out 3 closes with 1 bar on this outside reversal, you get more follow through the next day. Okay, and then it tries to progress higher and then comes back down. But notice what's going on right here. If you're reading the bars, you know that the midpoint of this bar is right here. You see the midpoint of this big green bar? I've talked about this in the past. Big green bars, look at the midpoint and see how the stock is reacting to that. Notice how we kept on coming down and finding support at it. Now, here's what I don't like about this. You notice the size of these bars? Look at the size of these. Now look at the size of these bars. They're huge. Big bars suggest distribution, right? I mean, we're getting more range action taking place intraday, bigger movement, and that is a negative, all right? That is not a positive when we see that kind of movement. This is more orderly. This is orderly. This kind of movement is orderly. But when you start to see all this price action, it's almost like water building on a dam here. Now, we tried to progress higher one more time and then get a topping tail into resistance, okay? And then look at this. You get a monster red bar that clearly takes out the midpoint and closes below the midpoint of this big green bar. So we're starting to get evidence. So if you notice, look at the difference between this pullback and this pullback. In this pullback, right? I mean, it's dramatically different. So what you don't want to do is get too caught up. So let's say this move to the upside, this move to the upside is showing positive DI on the daily chart. You got to be really careful because the size of the bars are expanding. It's clear there's some signs of distribution taking place. So you got to be really careful about looking at positive DI on a daily or an hourly chart at this point, right? Different than here where we're looking at negative DI, we're trying to temper that. Now we're trying to temper the positive DI and recognize, okay, we got to be a little careful. The size of these bars are increasing. And then when we decisively break the 18-week and break this big green bar, we know things have changed. Okay, but now let's keep going because I do think this is kind of important. So if you notice, we get follow through to the downside, but then look at what shows up here. We undercut this bottom. We've been progressing higher, okay? And then this is kind of like a little lower high, but this is really the first time we take out a low that led to a new high. You see that? Because this actually was a low that didn't lead to a new high. This was the last low that led to a new high. So that's really the trend line low, okay? So we get this big red bar, we move lower, and then we undercut this bottom. But look at what happens. There's no follow through. big rally off of that. Then we come back down again. Look at these tails showing up. So while the bigger picture is rolling over, remember this is a weekly chart. If you're looking to do swing trading or something like that, this is giving you pretty significant information that, yeah, the trend is turning down, but I can't be getting short this stock with these kind of bars showing up. There's too much underlying support. There's no progress below this key low. So now we get a rally to the upside and we get a tail here. That's a little bit different, right? We've worked off this low. Now we've come back. Now we've got a fib retracement level we're looking at around 50%. Now we can start to look for the short side again if we're interested in that. Now, I do think because this was such a big green bar, and we had these two green big tails, I think this would have been a hard short here. Trying to short here, I think was a little aggressive. We had signs of buyers showing up. Now, once you get this bar, we know that there's some damage done. Look at all these tails showing up. Now, again, trying to get long here. So let's say you're looking at this and saying, wow, we're pulling back to this support. Maybe this is an undercut and rally. No, it's not an undercut and rally. You had the gap down follow through, and then you have three tails here. So you got to keep in mind, the main reason why I wanted to do this is that you got to be really careful here is if the daily chart is showing positive DI because of these moves to the upside, you got to be very careful. After the first bar, you know that you have to start questioning it. That's after the first week. And then it went on 2 more weeks doing the same thing. Now, the reason why I think this has been a really kind of hard stock to trade in a way is because look at how we progressed lower and we had some follow through, rallied up, and then look at what this did. It went to a new low and then immediately reversed. No follow through whatsoever, and then it turns on a dime, comes back, and then we get bottoming tails showing up, and now we've progressed back up to the upside. And it was a pretty strong up move. Look at the size of the green bar. I mean, they're not making this easy. And this is why I say in a bear market, the volatility is usually higher and you have to be a lot more careful about the type of trading you're going to do. You have to be a lot more nimble. If you go bar by bar looking at the weekly chart, I think you can make a pretty good argument that this has been a very difficult market to trade. Lots of gaps, lots of big green bars countering the move to the downside. That means that you have to sit through a move from, let's say this was down at 277 and by the end of the day it was 300. Okay? I mean, if you're short this, that's a pretty painful little rally against you. Same thing here, that was even in bigger range. So recognize what's going on the weekly chart, the weekly bars. Okay? The weekly bars have great importance when you're reading the indicators on the smaller time frames. I haven't covered this in the past because I wanted to be sure to do this because it is something that I do and I sort of take for granted. I'm looking at each one of the bars on the bigger time frames, even the monthly chart, to get a feel for what's going on the weekly and the daily. All right, go ahead and post any questions or comments, and we'll see you next time.